Welcome back to TechKidFX for another Fetch AI price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Fetch AI chart, which at the time of this recording is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. We have also continued to obey the Elliot structures, where we had been seeing a bit of a breakdown to the lower side in the formation of this wave 2 in a move that managed to get into the minimum retracement area, which lies between the $0.3292 mark and the $0.2747 mark, in a move that gave us a low at around the $0.2949 mark. And having managed to get into the minimum retracement area in the formation of this wave 2, I now believe that whatever we are seeing at the moment is the start of an impulsive wave to the upside in the formation of this wave 3. And before I get further into the technical analysis, give you the short-term scenarios, and also sketch out my target areas in the formation of that wave 3, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a recap of what has been happening, where you can see that after seeing our lower low at around the $0.0525 mark, we started this massive run up to the upper side of being the Elliot structures, where you can see that I have this Elliot structure in yellow having the wave 5, giving us a peak at around the $0.6117 mark, and also completing the formation of that larger Elliot wave count 1 to the upper side. And after seeing the high for that wave 1, we started a corrective structure in the formation of this wave 2, and using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, which is a target area that we have now fully maximized. And I now believe that we are seeing the formation of this wave 3 and sketching out a target area to the upper side in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.1989 mark, and that is the minimum that I'm expecting that wave 3 to the upper side to do. And because of the impulsive nature in the formation of that wave 3, I'm also expecting to see a 5-wave structure in formation within the formation of that wave 3, having the wave 5 fully maximizing our target areas and also giving us the high for that wave 3 to the upper side. And this Elliot wave structure right here in yellow is what is going to give me the short-term scenarios that I'm expecting here on the Fetch AI chart, and I believe that is better seen here on the 1-hour chart. So jumping to the 1-hour chart, where I have this Elliot wave structure in red, which is a fractal wave within the formation of that higher Elliot wave count 3, having the first wave giving us a peak at around the $0.4854 mark. And after seeing the high for that wave 1, we started a corrective structure in the formation of this wave 2 in a move that managed to get into the minimum retracement area. And after seeing the low for that second wave, whatever we expect next is an impulsive wave to the upside in the formation of this wave 3, and sketching out a target area in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.6817 mark, and that is the minimum that I'm expecting that wave 3 to the upper side to do. And in the formation of that wave 3, I'm also expecting to see another 5-wave structure in formation within the formation of that wave 3, and for that move to also play out and for us to continue unlocking higher prices here on the Fetch AI chart, we need to continue holding above the 20-day MA here on the 1-hour chart and also on the 4-hour chart, since they are acting as support for us to continue gearing up. But in case the breakdown continues and we lose the 20-day MA here on the 1-hour chart and maybe also on the 4-hour chart, then there are high chances that we might have peaked in the formation of this wave 1 at around the $0.462 mark, which is a fractal wave within the formation of this wave 3 that I have shown you that I'm expecting within the formation of this wave 3 that I'm expecting on the short-term scenarios, having this as the first wave to the upper side. And in case the breakdown continues, then that will be the formation of that wave 2 before we can continue gearing up in a wave 3. Then expect a wave 4 and then our wave 5 to fully maximize our target area up here at around the $0.6835 mark in the formation of that wave 3. So that is what we can expect here on the short-term scenarios. And in case the breakdown continues, I can give you a target area in the formation of that wave 2 by connecting the Fibonacci's from the low of the first wave to the high of that wave 1, then that gives me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, which lies between the $0.4199 mark and the $0.4102 mark, and that is the minimum that we can expect that second wave to the lower side to do. So that is what we can expect as long as the breakdown continues. But on the long term scenarios, I'm a bit bullish on Fetch AI, where I'm expecting higher prices to give us a high at around the $0.6825 mark. So that is what I'm expecting here on the short term scenarios and also on the long term scenarios. And also getting back to the 4-hour chart to take a look at the indicators. On the RSI, we are trading at around the 59 mark, meaning we have massive room for us to fully support higher prices. Also taking a look at the market, we have been able to print a bearish cross, suggesting that there are chances that the breakdown in the formation of that wave 2 will play out, and there are chances that we might get to that target area in the formation of that wave 2 before we can continue gearing up in the formation of that wave 3. So that's all for this video, and I'll be keeping you updated.